Hello, everyone. Welcome to another episode of Robinhood Portfolio. For the past week, I am up $11.87. For the past month, I am down $895, closer to 6% for my portfolio. And for the past 3 months, I am down $440. So, guys, the markets are looking sort of bullish again. The bull is starting to charge back again, but people are still waiting to see what's going to happen with these elections throughout the week, and investors are either concerned or they're just waiting for the results for the selections of all these ballots. So it's going to be interesting going forward, and looking forward to it. So we're going to go right into the portfolio. We're going to see what stocks I have. Cvs Pharmaceuticals up $83.75. Total percent return is about closer to 130, about 130%. It's been trending back up. The stock recently announced that their most popular drug, I think it's Humira or something like that, they were going to sell Humira. They were going to lower the price of buying Humira, sort of like putting the drug on sale or something like that. And a lot of investors didn't like that. They thought that Humira should be priced at more, and so they could get more money off the drug. But past month is down 10%. I think this stock is trading at a 5% yield right now. This stock is, in my opinion, very, very undervalued. Amount of shares I have is 10. Average cost $79. I had $80 on the last video, but I've been rotating the money out, and I've been rotating money back in just to see if the stock would go lower. Excuse me. And I think that I think AbbVie is sort of just finding a new support level down at these little $79 or $80 ranges. So total return $41. I think they're a very, very undervalued stock for the yield that they have right now. Colgate, Dividend Aristocrat, consumer staple stock. I saw what they were on sale, so I swooped in and got some shares. Average cost $59. Shares 20. Portfolio diversity 8%, up total return of $20. Stock did not have a good earnings report. A lot of investors freaked out, so they sold. The yield was closer to 3% when I bought it. I thought that was a pretty good buy. I sort of did the same thing I did with Procter & Gamble. When Procter & Gamble started going on sale, I bought in. I bought it around $75, and I wrote it up. So I think I earned off $150 off Procter & Gamble. Dividend Aristocrat, Colgate. I like Colgate. I don't think they're going anywhere. So Cvs Pharmacy had a really good day. They had an earnings report today that I was really concerned with because I bought the stock yesterday. But what I really wanted was Walgreens, but Walgreens has just shot up so much, and I'm just like, wow, I need a retail stock. I need another pharmaceutical stock. And I looked at CVS, and I thought that CVS would be a good play here. I'm glad I picked them up because they actually did have a decent earnings report. They didn't have like a stellar earnings report where it just blew investors away, but they had a decent earnings report, very solid. 15 shares with an average cost $74. I think the dividend yield was around 3% when I got it. These shares up $57. Yeah, it's decent stock. I like what CVS is doing. They are competing with Walgreens. They are very serious about competition and pharmaceutical and healthcare retail. I know Walgreens is very popular with people, but do not sleep on CVS. They had a decent earnings report. I missed the earnings call. I wish I would have got into the earnings call, but yeah, good stock. I really like them. I can see them having a potential bet in this portfolio. Dominion Energy, $70. I sold some shares. I got out. I waited for the stock to go lower. I'm glad I did. $69.02 for a total return $23. It's a really good energy stock. So a friendly PE ratio. Dividend yield was much higher than that when I got those shares. I think it was closer to 4%, but yeah, it's a good utility stocks. I like Consolidated Edison a lot. I like Nexter Energy, and I like Southern Company. Those are some really good utility stocks. Lowe's, I picked some Lowe's shares up today. This may be a little bit high, but I only got 10 shares. Another Dividend Aristocrat. I look at AbbVie, they're a Dividend Aristocrat. Colgate, they're a Dividend Aristocrat. Lowe's is another Dividend Aristocrat. So all these Dividend Aristocrat stocks are going into the portfolio. I love the combination of growth and dividends. Stock total return up $6 a day, 96.90 for my average cost. That's not terrible. I think they should have a good earnings report off just based off the deduction of all those hurricanes that happened and people just shopping at Home Depot and Lowe's trying to protect their homes and stuff. So I'm willing to bet that they should have a good earnings report, but you never know. You never know what of these stocks. McDonald's is starting to trend back up $182. There was some news about Kanye tweeting that his favorite restaurant was McDonald's, and I think that he showed some love to McDonald's, and a lot of people are starting to like McDonald's. So the stock is starting to trend back up. It's funny how a celebrity can tweet something and, it just causes the stock price to go up or the fluctuation of the stock price to go up. But total return of $176 is by far the best return in portfolio so far, 10 shares at $165. I thought this was overvalued at $165, but now with the stock shooting up so much, $165 is starting to look really good. McDonald's needs no explanation. A very good growth dividend stock. I think my dividend yield is around 3%. So you guys see what I'm trying to do. I'm trying to keep the dividend yield around that 3 to 5% range. I think that's really, really good, solid yields to be around. It's really safe to be around that 3%, 5% yield. You don't want the dividend yield to be too low because you're not going to get paid a lot of money once those dividend yields pay out. Microsoft, I needed a technology stock. Most of these technology stocks are overvalued. I think Facebook is starting to become attractable. There's a certain attraction with Facebook with this cost. I think it was like $148 when I saw it. But 25 shares, I added more shares than Microsoft at an average cost of $105. 44 total return $44. There's not much to say about them. I mean, Microsoft is the leading technology stock in terms of cloud space. But yeah. I expect this if not for the sell-off of October, this stock could be well over $120. Shell Company, $65, average cost $64, 25 shares for a total return of $41. Good dividend yield. I think it's around 6% for the amount of shares that I have. For the average cost price that I have for the yield. Shell Company's pretty good. I like them. ExxonMobil, still a little bit pricey. I don't like, they don't have any growth to them. The Chevron, yeah, that's pretty pricey too. Enbridge is another stock that I've been looking at. I really like them. I really like their yield. I think I'm going to get some Enbridge shares and put them in the portfolio. Verizon, so I had T in the last portfolio. I had T in the last video. T is no longer here. T got pretty high. I think it got up to like $31, $32. My average cost was $29, so I took the money and I put the money in Verizon. This shouldn't surprise anyone. I have Verizon before, so I like them a lot. Actually, I like Verizon more than AT&T. I like their balance sheet. Their balance sheet is not as good as it once was, but it's still very respectable. There's a lot of there's more growth to Verizon in terms of cell phones and telecommunications. T is amounting a lot of debt with that Time Warner deal. They're very diversified, but the debt is going to hold them down for probably like another year or so. And the stock price, I won't be surprised if the stock price got back down to $29 again. And if they cut the dividend yield right now, the only thing that's holding T up is that dividend yield. If they ever decide to cut the dividend yield, I can see AT&T dropping another $20. So we're talking about stability here, guys. We want something that's stable. That's something that's going to pay me while holding on to the dividend. And just keep this portfolio sort of stable, and have to worry about the uncertainty of having to deal with debt as far as telecommunications goes. That's going to be it. There's really nothing much to see here. There's a lot of aristocrats in the portfolio, but normally these dividend aristocrats are the right combination of growth and dividends. I've been paying out their dividends for maybe about 25 years, 50 years or so. I know Johnson & Johnson has been paying their dividends for as far as back as I can remember, and if I can get that stock on sale again, I would. So, but AbbVie is really, really undervalued. I think they're a good buy right now. That's going to do it, guys. $105 for the day. After hours, I am minus 58 cents. So I really don't care about that. It was a really good day, thanks to the earnings reports from CVS. I think CVS is going to be a valuable contributor to the portfolio. There's been some more Dividend Aristocrats added to the portfolio, and let's just hold it out. Let's just see what's going to happen in these next few weeks with all these elections being over and the stock market volatility. We'll see what it does. So that's going to do it, guys, and I'll see you next time.